The challenge of stock trading is to understand stocks as they're developing and to be able to project what you want to see in the future.
I know people are gonna have tons of questions. How can they learn out? Welcome back to the show, everyone. Today is gonna be a phenomenal day. We're here sharing screens with my man Chris Morales, aka Tango Baker, who is a trader for over 8 years. And if you're not sure who he is, go check out his previous episode where we dive into his entire backstory. We'll have links down below. But today, you're gonna learn something called the liquidity trap. So Chris, take it away, brother.
So one of the big things when agreeing to doing the interviews and stuff is I wanted something that we could be able to give the audience a process that they can do on their own at home. So instead of it just being, we're just talking about charts and stuff, I actually want you guys to be able to take this concept and apply it in real life, and then you can be able to work on developing your own playbook for your trades, right? So
Perfect.
that was one of my biggest frustrations with interviews for all these years. They talked about all this trading and stuff and how they did it, and not how they did, but all this trading, and they made all kinds of money or whatever it was, but they never gave me a process to be able to work with, right? So this is what I wanted to do for you guys. So we're gonna be working with we're gonna work with theory first before we actually get into a trade. And this comes from Brett Steenberger, which is the psychological books that he's written. If you guys haven't read any of his books, I highly recommend that you guys buy his books, sit down, read it in the best way that works for you, either doing the audio version or doing your tablet. For me, I have to read it. I take a highlighter, mark stuff that's important, then I take my notes, and then I'll listen to it again in an audio format. That's what works for my brain. So this is knowing how you learn is super important, right? So in one of his exercises that he's given, it's called a visualization exercise. And you do this without a computer, you do paper, pencil, and you have to draw what you're looking for. And not only are you drawing for what you're looking for pattern-wise, but volume-wise, right? A lot of people don't pay attention to the volume. They just draw patterns, and then they're like, meh, whatever. And then or even most people don't even draw patterns. So this is just an exercise to be able to do at home. After you've been observing the market and realizing there's something working, but you don't quite know what's working, right? And so what we want to do is we want to create a theory for what we're working with. I broke down my screen into pre-market, which everybody works with. Then we have intraday, that's where everybody trades. And then we have the after hours type of market. So I highly recommend that if you guys do this, create your own template to be able to work with it. And then after you've done it a few times with paper and pencil, move over to digital or whatever works for you down the road. So in this particular thing, we're going to be working with first screen day, which in the previous video we defined what first screen day is, which is a stock that's been dormant for months or years with low volume, has done whatever on the daily chart, that all of a sudden gets a big run on the first day, right? And so since I don't have my tablet or my pencil to be able to do this, I'm doing it with my mouse, so forgive me.
Right.
Forgive me on this. So basically, we're going to have, it gaps up, the stock moves up in this type of direction, anywhere it can be 60%, 100%, 20%, whatever it is. It pulls back, and then it moves up and now starts doing a consolidation with the stock, right? And somewhere in this time frame, our volume shows very light movements with this. But in this particular case, we're working with a stock that has done something pre-market of between 10 to 20 million shares traded.
Okay.
Okay, some people like doing volume projections. You can do that. What I'm currently finding in the market for volume projections is we're looking at whatever pre-market does, you can times it by 5.69, I believe it is, or 5.68, somewhere in there. That's in this current market, which is, we're July 12th of 2024, right? So just in case you guys are watching this years down the road, this market that we're dealing with, we can do a projection of the volume from 10 to 20 million shares that most likely we're gonna end up in 100 million shares for the day, okay? From that point, get back over to here, we open kind of flat, and then it spikes up, breaks pre-market high of day here, does some type of consolidation over here. You can create whatever candles you want for that, pulls back down, and then this is, we're gonna have VWAP come join us here. And then back here, consolidates above VWAP, something along the lines, right? pushes up to the high of day here, but gets rejected, comes back down, and starts to fade off here. Okay. In the volume for the actual day, we have huge volume candles in here, and then just imagine that we're starting from lower. Now we have lower volume candles during the consolidation, right?
Significantly lower.
Significantly lower, right? Very, very low, significantly lower than what we're looking at. And then we have a big push, volume candles, and then we have rejected, and then it basically all volume dries up at this point. And it stays that way till the rest of the day.
Okay.
So that's our day one price action. You're going to have different variations of this depending on what you're looking at, but the main thing is we're holding 50% of the gains for the day. Okay, it's kind of like the Toyota example we're talking about. You have Toyota Tacoma and you have a Toyota Camry. We have two different kinds of Toyotas,
Yep.
right? So we're going to be working with the models of trucks.
Okay.
Right. Okay, so this is day one. Okay, let's erase the whole thing. Day two is hardly any price action happening in pre-market, but what's really important, so in this day, we're dealing with maybe 600,000 shares traded pre-market. And on the intraday, depending on the volume, but it's all going to be very low, we're looking at maybe 1 to 2 million shares traded for the rest of the day. So our intraday trading volume is, let's say, 1 to 6 million shares traded, which is a very stark contrast from the previous day when we did 100 million shares traded, right? And then, so the price action we're going to be looking at is it does nothing. It does this. It just kind of turns people. The shorts don't win. The longs don't win. It just kind of moves along the day, and that's pretty much it. Right. Okay, and now we're going to look into an intraday. So intraday is, we have, before we got the big volume in, whatever the candles are, you can create whatever pattern you want. But the intraday, the daily is a big gap up. You may have a wick on the top, and maybe a big wick on the top there, and then a little wick on the bottom. And then for this day, we've done 100 million shares.
Right.
Okay. Now day two, let's just do this for shits and giggles. Let's say day two is a red day, but let's say it opens up here. And we have a little wick here and a little wick here.
Yep. Which is what you just explained. It just kind of goes sideways.
And it kind of goes sideways.
And what he's doing right now, just so y'all know, while he's drawing this out, is he's showing the daily version. We just went through what intraday looks like from pre-market and after hours, so you could see what to see during the day. And now you're going to see what it looks like on the daily picture. Again, it's giving you the frameworks that we can kind of understand in a perfect world what this looks like. So go ahead.
Right. Okay, so this is the biggest problem that everybody has, especially when they start showing charts, is it's always Monday day quarterback style, which means it's completed and they say, oh, see how easy this trade would have been if you would have gone right here.
Right.
Right. And that's the biggest problem with everybody who talks about charts that have been developed. The challenge of stock trading is to understand stocks as they're developing and to be able to project what you want to see in the future, right? And so in this scenario, there's one thing that I always try to tell everybody is, when is the chart broken? So if the chart is broken, you can't trade it, or that particular play you're working for is no longer valid.
Yep.
So do you have another play that can support whatever just happened, or
Is it done?
it's done? That's it. You don't do anything. So for this play to be broken for me, we will do another red day, and we will gap down, and we'll have a little wick because it gaps down on the pre-market, and then it opens up, pushes into resistance here. We have a little wick, and then it completes the day. At the bottom, completely sells itself off, right? If that happens on that day, I can't trade it. Especially in the thing at the very beginning is on pre-market, it gaps down instead of gapping up or holding. If it doesn't gap up or hold, is no longer going to be a liquidity trap trade for me anymore. It's going to be dead, and Now I got to go find something else to be able to trade,
Yep.
right?
So that's what you don't want to see.
That's what I don't want to see.
Correct. You may have noticed that there are not a lot of sponsors on our show. That's because I don't believe in advertising for someone I don't believe in. And I'm very proud that Cobra Trading is the sponsor of Be The Trader. I use them every single day. And Forbes Advisor recently did an exhaustive research on day trading brokers, and Cobra Trading was the only broker awarded in 2 categories. One was, you guessed it, customer service. If you've ever experienced an issue with your broker and couldn't find good customer service, that won't happen when you go with Cobra. Sign up now using the link below, and Cobra Trading will provide you with 1 month of free software and 33% off a commission for life. I know you'll enjoy trading with Cobra just like I do every single day. Let's get back to the show.
What I do want to see on the daily is that it's going to either open in the middle of this candle or open above the candle, and it's going to break the high of day from the first day of 100 million shares traded. That's what I want it to get to. Right?
Yep.
Okay, so let's erase this, and then let's set this up again.
And so now I'm assuming we're going to show what intraday day 3 looks like
Yes.
on what you want to see.
What I want it to see.
Okay.
And that's the biggest thing is a lot of people, they keep on getting into a stock 2, 3, 4, 5, 6 times, trying to wield it to do what they want. And the reality is you can't wield anything. You just have to understand what's happening with the stock. And if you can't understand that, you're going to go on tilt, and then you're going to get frustrated, and then your little loss turns into a big loss because you keep on hitting that with a hammer, and it's not going to go in.
It does not work.
It does not work. Okay, so pre-market, it starts still holding 50% of the gains.
Right.
It's doing a little consolidation, but it's starting to move its way upwards. This now becomes risk. The volume here is higher than the previous day's pre-market, but not up a lot yet. So let's say we're trading
1 million shares.
1 million shares traded pre-market, which gives us an indication that we're going to at least do
5 to 8 million.
5 to 8 million. Yep. What I do like to see is it's holding it, and then it starts curling upwards. When it starts curling upwards down here, the volume candles are getting bigger and bigger and bigger as it's curling up. Right? This is a little bit dormant here. That's the first 15 minutes of the market, which I was noticing you this morning. You don't like trading the first 15 minutes. You like to see it develop a
For
little
the
bit.
most part, today there was news that was coming out, so I had to wait until after that came out. That was mostly why that day, today.
So then you start curling up, and then the volume candles start really piling in. And now this, let's say this is the high of day breakout from day 1.
Yep.
And now it's going to be going further and further. It breaks it past that, and all the volume is coming in, and now we do another 20 million shares on the day.
Yep.
Because now shorts have to cover because they've passed a risk point, or they're being forced covers from the brokerage company because they only allow so much margin, or they hit a T+3 rule. So if you guys don't know what T+3 rule is, this is back where I was saying you need to own your knowledge. You need to research what T+3 means for shorts. And let's give a quick summary of what T+3 is. T+3 is when the brokerage company can no longer hold the shares long. They've been sold off, so anybody that you're borrowing your shorts from gets called in, and they have to cover it up. That's T+3. If you've ever been a part of it, you get an email in the morning saying you need to cover by this time of the day. If not, we're going to force your hand, and we're going to X you out no matter what price you're at.
Yep.
It's called T+3, and there's more details to it. I highly recommend you guys do your research on that. So this is what is a liquidity trap. Basically, what starts to happen is a whole bunch of people are interested in it, holds 50% of the gains, no winners, no losers. But what happens with the longs is they've tied up the float. So if your float is starting at 10 million, 100 million shares traded, and you had float rotation multiple times, the float actually becomes smaller for a small bit of time. When it becomes smaller, it's easier for it to move. And that becomes...
And for those who are not aware, just FYI, float is just, for simplicity, the amount of people in that play, or the amount of shares available to actually trade that. And if it's a 10 million float, like you said, and we traded 10 million shares, just in your eyes, just visualize 10 million people are in that play. Just keep it easy. It's not the correct, but it helps understand.
Okay, so we'll go to real world experience here. We're doing with IVP, which is what happened today. With IVP, trades over here, approximately, let's return this and go back over here. Let's look at the daily. In this range, this day we did 30 million shares. So in this case, it's a little bit different, but same, right?
Yep.
The volume dried down to 4 million shares, kept 50% of the gains. And now today we have broken past the first green day's volume. We're sitting at 36 million-ish shares. So this is basically what we're looking for. The biggest thing, and most people don't know, is this portion of the trade when they're looking at it at this portion of the trade, right? And that's where risk comes involved. When you're starting to take these trades, your risk is the possibility of your pattern not working out. And how much are you willing to lose for that? So there's that portion of it, and then over here, this is what we're looking at for our trading volume. In this case, we had a large amount of trading volume at the end of the day, locked everybody in, came back down. You can call this a continuation trade because it's using the previous day's highs over here as support, holds it across volume, starts curling up, and then off to the races.
I love that you started off by just sharing the concept and then you show it, because this would have been very confused for anyone to see this and be like, oh, okay, I get it. But now they understand what they're looking for on a perfect world and then how to apply it to an imperfect world.
Exactly.
Right?
Exactly.
So what would be the biggest tip you have for someone who might be trying to do something like this because they just see this video
Right,
and they're like, okay, I'm going to trade right away.
So the biggest one is you've seen it once and now you know it exists. So this goes into the Steven Neeson's, is it Steven Neeson, the Black Swan? Is it Steven Neeson? I think it's the writer of the book. The Black Swan is basically the thesis of the book. By the way, don't read the book. Get the audio version of it and listen to it, because he just rehashes the same concept 100 different times throughout the whole book. It's a waste of your time reading it, but it's very important to listen to it at least.
Okay.
And so the thought process is a black swan never existed, right? Everybody kept on looking for black swans. They always see white swans, so nobody ever thought a black swan existed until somebody found the black swan, and now that changes the whole paradigm. The paradigm is related to you as an individual. You don't know a black swan exists until you've seen a black swan, right? This is where it comes into stocks that go from $5 to $100, and there is some short seller somewhere who has his firm loaded up on it, and they're short in a very large way, and then he has to try to explain why he's getting pushed out of stock that goes up to $100, and now he's blown up a firm. By the way, if you guys ever see stocks that do 5 to 100 in a couple, 2 or 3 days, a year from now or 2 years from now, you'll actually see the article of the firm that blew up because of that stock. So that's the back end side of stuff, being aware that this exists.
Right.
So this is your first rep. Now it's up to you to, one, create different variations, draw it out, your different variations of this particular play, right? And then create data that supports it. And there's 2 ways you can do data that supports it depending on the type of learner you are. One, you can do screenshots of these and collect them over. If you do screenshots, make sure you take your daily screenshot and then your intraday screenshots. And then also you can do Excel sheets. Some people like using Excel sheets to be able to work with it. But you need to collect enough data that you understand when the chart's broken, not when it's successful. When it's broken, because that goes into your risk.
That was well said, man. Look, okay, we're ending there, but I know people are gonna have tons of questions. And so could you tell them real quickly, how can they learn out more about you?
I'm on Twitter, 2 Left Feet Tango, because I used to teach tango a long time ago. I'm on Instagram, 2 Left Feet Tango, right? But more importantly, I am one of the coaches within Roland Wolf Trades. You can join Roland Wolf pack there. If you want to do one-on-ones, you have to either purchase one-on-ones or be part of the lifetime service, and we can go over these theses and processes for you.
Look, man, I appreciate you being here today. I know so many people are going to be so appreciative, and they're probably going to want to learn more. So thanks for sharing that.
Oh, yeah.
And again, thanks for being on the show, brother.
It's been fun.